Well, hey everyone, this is Javier with the Libertarian Investor, and we're in the middle of a huge anomalous cold snap in the United States. I just want you to look outside here. This is what we are dealing with here in our condos, and I've been inside for the past 2 days, been studying, I've been contemplating. And I just wanted to make a short video. One of the main reasons why you have to be an independent investor, why you have to use your own mind and your own techniques in investing. A lot of people will say, well, just investing in general in the long run will give you returns in the long run. It will give you at least 4 to 5% returns. It seems that way. Even people whom I respect, like Gerald Peters, who talks about investing, say that over time the S&P 500 has gone up. Over time the market has gone up. And the question is this true? I want to demonstrate this to you through the recent growth in precious metals. So let's ask ourselves the question. Has the S&P 500 historically gone up over time? Let's see. So here's the S&P 500 historical chart, guys, and this is from 1930 all the way until now. And as you see, it is inflation adjusted, but it's priced in dollars, guys. Look at this. It's just going straight up. And you would think, well, it's a great idea just to invest in an index. If you invest in markets, you're going to be all right. This is what many investment teachers and gurus teach you. But let me show you the real side to this, because, again, money historically, if you know anything about Austrian economics, has been gold and silver. And gold and silver still retain this monetary aspect, whether modern economists want to admit it or not. So if you had held gold or silver, what would your returns have been versus the S&P 500? And we know they would have been a lot higher, because gold and silver have just gone a lot higher in the last year. But what if you would have bought and sold the S&P 500 in terms of gold and silver? In this case, in terms of gold. So I just want to show you these charts. These are priced in gold, guys, and these are charts of the S&P 500 priced in grams of gold. And so adjusted for inflation, guys, first of all, they say this S&P 500, this first chart, was adjusted for inflation. But what inflation are they calculating? They're calculating the average 2 to 4% per year inflation, maybe 5 to 7% in very radical estimates of inflation of the dollar. But this inflation is bullocks. It is complete nonsense. And if you read Ludwig von Mises and his commentaries on how they come up with the consumer price index, it's a randomly picked basket of goods, and it is a basket of goods that is chosen by statisticians to basically blunt the strike, so to speak, of true inflation. So if you look at a bunch of products that perhaps housewives are buying, you will see 4 to 10% inflation per year, again, depending on how many products you want to add. But are you including precious metals in that determination of inflation? Are you including luxury goods? And are you including the inflation in stock prices? If you would have included all that, you would have gotten at least 20 to 30% inflation, guys. Rather than doing that, you can just take the price of grams of gold and you could price the S&P 500 in grams of gold, which is exactly what this chart does. And if you look at from 1870 until now, yes, it has gone up throughout that time. And that is because companies on this index are performing excellently. It has gone marginally up, but not in the slope that it has gone if you just look at it in dollars. But now look at this, guys. Look at this chart. This is the chart from 1950 till 2030. Look at this. It went way up in 2000. Of course, that was the dot-com bubble. Then that burst. Look at this, guys. it's been flat from about 1965 until now. In fact, you've lost money from 1965 until now. So if you would have kept your money in the S&P 500 on an index or an average from 1965 until now, you would have lost money. So you cannot just trust the experts, trust the market. You have to make your own investment decision, and you have to make extraordinarily good investments. Now look at this chart. This is from 2006 until now. And from the beginning of 2006 until now, you have lost money. So it is not the case, guys, that the S&P 500 always makes money over time, nor is it the case or going to be the case that real estate always appreciates over time. These are lies by the establishment, and the reason that is not the case is because of the Austrian theory, what we describe as the Austrian theory of the business cycle. So this is just a quick lesson, guys, as to why investing in the market is for suckers. Investing in yourself and in a strategy to maximize returns that we talk about on this channel is the only way, not only to increase your wealth, but to just keep up with inflation, guys. So you see, guys, the S&P 500 and the markets priced through inflation, priced through metals, you're actually losing money, and it's been flat for all of these years. So you can't just put your money in and get market returns. You have to get outsized returns. If you look at the investments we've made on this channel, you can just go back and watch the past videos. Look at investments like Lunar, look at Oklo. We have made multiples of returns. We are beating inflation, and I would argue that our way of investing on this channel is the only way to not only make money, but simply to preserve your capital. In order to preserve your capital in this fiat money inflationary environment, you have to invest like the libertarian investor. So guys, thank you so much for watching, and we will be posting more videos this week. Hopefully this weather will calm down over the next few days, and we'll be talking about investing, we'll be talking about life, we'll be even talking about libertarianism and how to live free. So guys, please do subscribe to the channel and like the videos. Till very soon, this is Javier with the Libertarian Investor, bidding you a wonderful Sunday, a wonderful rest of the weekend.